Liquidity is one of the most important concepts in my trading, right? So I'm going to teach you on how you can use this to your advantage and for you can see how powerful and accurate it actually really is, right? We have a bunch of things to learn here. Not even a bunch, just a little bit, right? First, you need to understand two things. You need to understand sell side liquidity and buy side liquidity. This right here, all of this right here, you can consider all of this, right? All of this is sell side liquidity. Then all of this is buy side liquidity, right? We also had buy side liquidity up here as well, right? Now, in order to really understand liquidity, we have to understand the psychology behind the traders on why this isn't a thing. People in the institutional level who trade with billions and millions of dollars, they need their orders to get filled. And the only way that they can do that is by getting people out of their positions or for them to go the opposite direction, because not all of their orders are going to get filled at once. So they take out liquidity to actually move the market in the true direction that they want it to, right? Or you could say that an algorithm does it, whatever, right? But the logic behind it is basically it stops traders out from their positions, right? So with that being said, and hopefully understood, you can see why this happens, right? So usually any traders who are going long, they'll usually set their stops right here, right? So let's say they go long right here. They're usually, and they decided to enter right here. They're usually set their stops right here. And then because of that, they'll end up getting stopped out, right? And it also comes down to the psychology of, the traders, right? So usually when people go long in this area right here, right, they'll end up setting their stop at the low where that was formed, right? And then they'll also continue doing that for on and time again, on and time again. Same thing could be said about short positions, right? Usually traders will set their stop at the high, right? And now this engineers buy side liquidity and takes out buy side liquidity and actually goes to the true way it was supposed to, right? So with that being said, I'm going to show you guys a couple examples and I'm going to show you how you can use this. So as you can see, we opened up on market open, taking out the liquidity from here, right? And we also have a little bit of a fair value gap right here, right? We have a fair value gap right here. And from the way it looks, this wick rejected off it pretty heavily, right? So we also have a bunch of buy side liquidity right here. We have sell side liquidity line below here, which is what we took out. And we have a bunch of buy side liquidity relying up there, right? We also have a bunch up here as well too, right? Right here and right here. Now, let's see what happens. Let's see if we reject off here or we continue coming down, or if we go up to take these guys out, right? Because we have a bunch of liquidity right there. Okay, we continue down. We also have more liquidity lying below here, right? So let's watch if we take that out. And we also fill that fair value gap. Take out that liquidity. And then we continue going. Now we also have liquidity lying below right here. We have liquidity lying right there. We already took out this liquidity. We're also in a little bit of a fair value gap right here. And even right here as well. There's another one right here as well. Right? So let's see if we fill it. But we filled it, but you can notice something very interesting, right? We end up taking out this liquidity as well, right? And we just keep going. Okay. We have another fair value gap line below here as well. We're filling all of these fair value gaps right here. Seems like we can possibly come up right here, but it looks like we're also engineering liquidity right here. Seems we could come up here to take this liquidity out. But let's see what happens. Boom, it takes it out. So it's kind of more like a magnet. It attracts it. Liquidity is more like a magnet where price wants to go. Always think about this. Where's the next draw on liquidity? Where's the next draw on liquidity? Where's the next draw on liquidity? Always think about it, right? Always ask yourself that. And now the draw of liquidity is basically, where do you think price is going to go next? Where is liquidity lying at? What is your daily bias? Now, another thing that's extremely useful with using this, if you use liquidity along with your daily bias, it can help you a lot. So let's continue going. We engineered liquidity right below there. And this spirit value gap seems to be turned inverse now. Let's see if we reject off it. Bang. We had liquidity line below here and we ended up taking it out, even though we ended up closing as, a high. So where do we have liquidity line below? Let me clear all this. Let me clear all this mess for you could see it a lot more directly. Right? Where do we have the next? Where do we have liquidity, or where do we have the next draw of liquidity? We have liquidity line below here or above there. We just have another part of liquidity line below here. But this is where we had an impulse move up. So this can be an order block where we could potentially reverse from and continue the uptrend. But we have a bunch of liquidity line above here and continue on going so forth. Right? So let's see what happens. Get big displacement to the upside. Take out that liquidity once again. Let's see if we continue going. And we ended up taking out this next draw of liquidity right here where we formed. So we were just engineering liquidity, right? So with that being said, where's our next draw on liquidity? Where do you think we're going to stop next? Where do you think we're going to go next, right? We have a bunch of liquidity line up here. And overall, the trend seems to be in an uptrend, at least for the last couple of days, right? We had a market structure shift right here, right? Taking out all the liquidity right here as well. Market structure shift. And we're also continuing that market structure shift now. Where do you think we can go? Do you think these areas are going to be taken out? Yes or no? Or do you think we'll just continue going back down? Well, let's see if you're right. We also have more engineered liquidity down here. So let's watch. And we also have liquidity line above here as well. We also engineered more liquidity below here. So chances are we come down right here, take this out, and then continue on where we were going before. So we took that out. We also engineered more liquidity up here. Let's see. Bang. We also took out this right here. So price just likes to attract to these lows. That's what price likes to do. Price just likes to attract to wherever there's liquidity, right? So we had liquidity right here, but before we actually did that, we ended up coming up right here, taking out this liquidity, and then coming back down low here to take that out. So let's keep watching. We get big displacement, or somewhat displacement. Now we get big displacement to the downside. So chances are we're going to come down here and take that out. But where do we have more liquidity line below? Right here, where it's almost close to. Where do we have our next draw on liquidity? Where did we engineer liquidity? Right here. Let's watch. Bang. We took out all of this. There was liquidity line below here, here, and here. We engineered liquidity right here. Accumulation right here, where we have this consolidation or this range or whatever you like to call it. We manipulate to the downside. So we saw manipulation to the downside. And then we saw distribution to the upside, taking out all of this liquidity. Where's our next draw? You can even potentially target right here. Set your stop below here and target this. Just watch. And that's the take profit hit. We also have more liquidity lying up below here. Follow the trend. Follow the trend. Where is the next strong liquidity? Always follow the trend. And it'll take you where you need to be. See, there was liquidity line below there as well. And you could see, if I was still in that trade, I would have been liquidated. But you can see this as an example. Price just attracts to liquidity every single time. Every single time. Let me show you another example. So where's our next drop of liquidity? We have a bunch of sell side liquidity line below here and here as well. We're also forming liquidity down below right here. And we also formed the fair value gap right here. So let's see. Seems like we can't fill this fair value gap, but let's just keep watching. Ideally, liquidity down below here would be nice to be hit, but let's just see what happens. You see, we take out that liquidity. Follow the trend. Just follow the trend. And we take out all of that. See? And we have more liquidity line below there. So let's keep watching. I would wait. Ideally, this would be a nice position to take right here. Right? If you wait for that liquidity to be hit. Right? We're in a downtrend. I'm anticipating for us to come down a little bit lower. Price action isn't looking very nice. But we have another fair value gap right here where we formed, right? It's possible we could continue rejecting. We also have accumulation below here. So pretty good chance. Take a short position, target here, unless we decide to go up right there for that liquidity. We also have a bunch of sell side liquidity line below here. So let's see what happens. And it's hit. Now this is liquidity for you. This concept is one of the most powerful. And let me simplify it and give you a better example if you didn't understand, for the people who still don't understand and who were just, not understanding. Liquidity is just basically highs and lows, right? So imagine this, right? There's not really highs and lows. That's not the best way to explain it or put it. But liquidity is just basically, right? Every time we're in an uptrend, anticipate for the higher highs to be hit. Every time we're in a downtrend, anticipate for the lower lows to be hit, right? And if we've been in a downtrend for a long time, then anticipate for, the lower lows to be hit. But if we've been for another downtrend for a long time, anticipate for the higher low to be hit. And then let it continue down to wherever it has to. Let me full screen this for you guys. And that's basically all liquidity is, right? Just every time, think about it this way. If we're in an uptrend, anticipate for the highs, the higher highs to get hit. If we're in a downtrend, anticipate for the lower lows to get hit. Every single time, lower lows get hit. So regardless if you're bearish for the day or not, if you're bearish for the day, then anticipate for the lower lows to get hit. If you're bullish for the day, anticipate, and we've been in a downtrend for the last couple of days, then anticipate for the higher lows to get hit. So ideally, you just want to do that. And that's basically liquidity for you.